Today, in line with our strong commitment to our price stability mandate, the Governing Council took further key steps to make sure that inflation returns to our 2% target over the medium term. We decided to raise the three key ECB interest rates by 50 basis points and approved the transmission protection instrument that I will refer to as TPI. The Governing Council judged that it is appropriate to take a larger first step on its policy rate normalization path than signalled at its previous meeting. This decision is based on our updated assessment of inflation risks and the reinforced support provided by the TPI for the effective transmission of monetary policy.
Rolake Akinkugbe, Chief Commercial Officer, Mixta Africa, also decades of experience in the energy sector, financial services and the like, joins us to talk about global news. Rolake, good morning. Thanks for joining us.
Good morning. Good to see you, Otis.
Same here, same here. What do you make of the ECB decision?
Well, very interesting. I mean, the biggest rate rise in nearly a decade. And the interesting thing is that the introduction of this TPI instrument, the transmission protection mechanism, kind of reminds us of quantitative easing, what the US Fed Reserve did in the aftermath of the global financial crisis. And I think the challenge here for Lagarde and the ECB Governing Council is that Italy, one of the key members of the Eurozone, is now facing a serious debt crisis. And so this idea that you raise interest rates and then you consider buying bonds seems contradictory, but it seems like some sort of trade-off has gone on within the Governing Council, and there's a bid by the ECB to narrow the spreads between German bonds, for instance, and Italian bonds. But I think it's a very interesting step. We could see a further rate rise in September, which may also underpin the reason behind this TPI program, which I would like to call a sort of European quantitative easing.
Okay, so South Africa, they've raised rates. Nigeria, the ECB, I think the BOE has talked about raising rates. The Fed next month. This battle against inflation, do you think the central bankers around the world are winning it?
I think they're trying to win it. It's a bit of a difficult one because in America, growth has always trailed inflation, whereas in Europe, you're seeing stagflation. For the emerging economies like Nigeria and South Africa, if the global north is raising rates, there's a problem because typically higher interest rates in our part of the world has helped crowding foreign capital. So I think they're also trying to play catch up. But let's not forget the impact of Russia, the Ukraine crisis, which is still disrupting global food supply chains and the global energy supply chain. And that's obviously importing inflation to many of these economies. So we're likely to see more federal central banks and Federal Reserve banks across many economies in the global north and south actually move to try and curb inflation as much as possible.
I want to get your thoughts on China, the housing market, and this folks refusing to pay mortgages. You're in the housing, that's what you guys do at Mixta. You cover real estate. So what do you make of what's happening there?
It's a really interesting structure for the housing market in China because China actually has an off-plan mortgage market, which is essentially you can take out a mortgage on a home that's not already been built. And that could pose systemic risks to the industry. But I think the Chinese government is more concerned about the implications because the Communist Party elections are coming up and you don't want a huge default on mortgages across the economy ahead of that. So there is a social question for China, but I don't really see this posing a systemic risk to the banking sector in China because the mortgage market only accounts for a small portion of that, even though we're seeing an increase in uptake of mortgages.
I want to ask you about Argentina. There's some news that the government is taking some measures to try to protect the peso, giving some concessions to foreign travelers coming into the nation. What do you make of those decisions that they've made?
Rotas, it sounds eerily familiar, but I think this is to be expected. I think the government is trying to still maintain investor confidence. If you notice, foreign tourists are still allowed to buy up to $5,000 on the local markets. There's also a parallel market there in Argentina. Argentina is facing a twin issue of inflation, which is almost at 60% since the start of this year, and rising interest rates. So there is a major economic stability issue, also further exacerbated by a change in the Minister of Finance who recently resigned. So that's understandable, and I think those exchange controls will continue in the short term.
In fact, I think we might have a chart where we show the divergence. It's from Bloomberg, the divergence between the official rates and the blue chip. And the blue chip, right? Yeah. Do you think that emerging market nations like Argentina, which I think has been talking to the IMF for assistance with debt, the other measures, or rather the geopolitical issues that are happening around the world, can any of these measures work to get them past the challenges that are being faced?
I think it can provide some sort of stability.
Yeah.
But as you know, many of these countries are battling the juggling between monetary policy and fiscal stability.
Yeah.
There's issues around taxes, economic growth, welfare support. And I think Argentina can somewhat insulate itself in the short term. It has high borrowings, and that is a major concern for the IMF and, of course, the government. So, only time will tell, with Russia and Ukraine still a major global headwind. Yeah. Pretty much for the rest of this year, I see the Russian-Ukraine crisis continuing. I think these inflationary tendencies around the world, challenges around the exchange rate will probably prevail.
Tough stuff. Coinbase, executives there are being charged with insider trading. It's the first, I think, insider trading case for cryptocurrency. What do you make? The meltdown in crypto, I think we can put up crypto prices as well. What do you make of it? Is the crypto brand damaged beyond repair?
It's hard to say something that is quite speculative will damage its brand, because by very nature it's speculative. Right. But I think why this is a watershed moment is this is the first time the Securities and Exchanges Commission has actually charged insider trading in cryptocurrencies. It did a similar move in NFTs, non-fungible tokens, although I think enforcement was an issue there. And even though the amount that was gained from this fraudulent activity was about $1.1 million, I think it's trying to send a very strong message to this on this sort of practice in the sector. And of course, when you're going to list crypto assets on an exchange, the natural thing that happens is the value of that currency goes up. So whoever was involved in this obviously was privy to confidential information and took advantage of that. So I think it probably introduces a bit of concern around the future of cryptocurrency, but cryptocurrency is here to stay, in my view.
Well, I ask every guest that comes on, what's your view on cryptos? You have a cautionary tone around them, or do you feel?
Well, I think investment in cryptocurrency is naturally speculative, but I think you invest money you can afford to lose. Right. You don't plan on an education fund for your children based on cryptocurrency. Right. So it's part of an investment portfolio strategy, but it shouldn't form a significant amount of any investment portfolio. Gotcha.
Finally, let's talk sports. FC Barcelona, they're getting another 300, well, it will be announced later today, I believe, according to people, insiders familiar with the matter. 300 million euros from 6th Street, an investment house, I think, to buy more players this summer. They also have some debt issues. So what do you think of the move?
I've always said the only time sports interests me is when there's an investment angle. And this is a major boon for Barcelona. Yeah. Also because the price cap on wages was a problem. 97 million euros, I think, was a price cap. And how do you attract great players? So I think this is a good investment by 6th Street, who have obviously sports and media experience. And it means that I think till 2047, 10% of La Liga TV rights that Barcelona has will be going to 6th Street. So I think it really helps them in terms of negotiating players in the season. If you look at the league tables, Barcelona was trailing behind. Real Madrid was the top payer at the time. I think it had about 790 million euros as a wage cap for its negotiation. So great move for Barcelona, of course, 6th Street. And I think the club is also planning to merchandise and sell off some of its merchandise business as well in the future to raise more investment.
Rolake Akinkugbe, Chief Commercial Officer, Mixta Africa, thank you so much for joining us to go over global news. Appreciate your time.